Are you convinced by attempts being taken by the government, the strong statement coming from Raila Odinga's office? Will a high-level panel cobble together and for the next couple of days come up with a solution for the shilling?
I think it remains to be seen, but looking at the current issues surrounding the weakening of the shilling, I think there's a bit of a skepticism as to what extent the government can do at this time at this time of day. And I think the main factor behind the fall of the shilling is actually related to a weakening balance of payments position. And I think unless there's an injection, a serious injection of forex into the country, it's not very, very clear whether the shilling will continue to stabilize in the months ahead or in the weeks ahead.
I mean, baffled by what's happened, because we have seen interest rates being increased. We have seen discount window rates being revised. We're already starting to hear authorities say probably speculators are active in the market. What's your view?
I think we need to look at this thing from the very foundation of it. Speculators do not exist in a vacuum. They operate on the basis of information. And I think speculators would not take a position on the shilling if they were not certain that fundamentals are currently against a strong or a stable shilling. So I think unless we have a real improvement on the real side of the economy, and by that I mean, an easing of the import bill, more inflows from foreign exchange and and the capital account and the like. Save for that, I don't really see how far that stabilization is likely to play out. And I think probably the other measure that they could probably fall back on in the immediate term is to consult with the IMF and seek a quick release of the funds that were scheduled to be released under the ECF. So short of that, I really don't see whether the market is really going to buy the talk that is coming from government at this point in time.
All right, so the IMF could help with an extended credit facility, but we're also reading in the Business Daily that it's possible for the CBK to unveil, and that's absolutely the wrong word, some dollars or unleash dollars into the market, particularly to help oil importers, because when you talk about balance of payments, this is where the real pinch is being felt. Kenya is a net importer of basic products, food and also fuel, and this is where the need for dollars is coming through, particularly in an environment of inflation. Is that going to mitigate?
I think it's just another short-term measure because by and large, unless we are really getting a steady stream of inflows from foreign exchange, any interventions by the central bank, whether through releasing dollars or otherwise, is just going to be a temporary reprieve. But I really don't see the shilling stabilizing or even strengthening if the balance of payments position is still the way it is. And I think perhaps we need to look at the situation down the road, the greater factor being the success of the short train season. And I think that is likely to bring a reprieve in terms of falling food prices, less dependence on thermal electricity and the like, which is likely to reduce the import bill, and perhaps that might improve the BOP position. But short of that, it's actually interesting to see it will be interesting to see what measures they will announce that are likely to control the weakening of the currency. Okay,
we're starting to see fiscal action in terms of the government starting to make their voice heard, and maybe they'll rein in their spending. But still, in terms of what's within the ambit of the CBK, interest rates, we're told that they might be having an extraordinary monetary policy committee session in the coming days. For those who are active in the market, for depositors who in this high interest rate environment are seeing a lot more value in terms of returns that they'll get, this plays into their hands. Who's benefiting from a market like this?
I think foreign currency traders are really the gainers, because if you look at exporters, in as much as they are getting lower prices or competitive prices, they're also being hit hard on the side of inputs and costs, just like everyone else. So everybody is actually facing lower margins. And I think looking at what is playing out, perhaps there's need to look at other measures, because I think looking at especially the way the CBK has allowed short-term rates to go upwards, and we haven't seen that really doing much in terms of affecting the liquidity position and strengthening the shilling. there's a general sense that you'd get that perhaps monetary policy is not very, very effective, in terms of containing the shilling at this point. Perhaps other measures need to be looked at, and I still think the issues are not so much now in terms of a monetary intervention, but they are probably now more on the side of the real economy. What do we really need to do to improve the inflows that have been declining in the last year or so?